Hey folks, this is Rainer here from tradingwithrainer.com. So how are you guys doing? Alright? So for those of you who are new, I would like to say thank you for checking out my Forex analysis. And for those of you who have been following me for a while, you probably know that what I do each week is actually to identify the trend or the bias on the weekly chart and find entries on the on the daily and the 4 hour charts. So that's what I do each week, alright? So basically it's swing trading, alright? Identifying opportunities so that you guys can actually take advantage of it in the coming week, alright? Without further ado, let's look at a forex pair which I mentioned last week, alright? Right, this trade is actually very interesting because depending on your trade management, this bad pattern will either stop you out at break even or put you in the money right now, alright? So let me go through this pattern once more and explain why. So I'll just briefly draw out this bad pattern and highlight to you where is actually the reversal point, alright? So basically a bad pattern, this is the impulse leg, alright? Alright, and you notice that price actually terminate here 50% of the move, right? Because a bad pattern would usually terminate either at the 382 or 50%. So for this, it terminated at the 50%, right? Next, I'll use my Fib expansion tool, right? Connect from the high to the low, right? Back to the swing high, right? So where we are looking for termination of a bad pattern is actually at the 886 level, right? In confluence of the 1618, which is here, this area here, right? This box here is where I expect a termination of the bad pattern. As you can see, price just came in, touched a little, and rallied off higher, right? But before that, some of you may have entered at the 107 area, which is here, because it's confluence with the round number. So it really depends on your entry and your trade management, and that will actually affect your trading result, which is something that I'd like to go through right now. So for me personally, I will have a buy zone of around here, right? This green zone here. Actually not so thick around here, because we have the confluence of the 107, right? So for traders, some of you would have entered here, which is this green zone. Assuming you entered this wick here, right? And your stop loss will be placed below this swing low over here, alright? When price rallied up higher towards here, what you have a tendency of doing is to set your trade to break even, alright? So meaning you will be in a risk-free trade, and the trade, even if it go against you, you'll not lose any money. But look what happened. Price came and test this previous resistance here, alright? And head down lower, taking you out and break even, alright? So you thought, okay, I follow my rules, so never mind. But look what happened next. Price rallied much higher, alright? And causing you to be out of the entire move, alright? If you're talking about what the current move is about at least a 1 to 2 right now, and you actually missed the entire move. So you're wondering, is it your trade management issue, or would it be something that you have to accept? So let me just go through with you when you should actually set your trade to break even, or how you can actually go about catching this chunk of the move, alright? So let me get rid of those markers, alright? So how I would actually play this, there are many school of thoughts, right? And I'll just give you the more common ones, alright? No point going to those really exotic ones whereby you guys don't really understand what I'm talking about. So I'll go through you the first school of thought. The first school of thought is that when price hits 1 to 1, you set it to break even, right? To break even, so you'll never lose a trade. But I do not really like 1 to 1. The reason being is that, how to say, you are not giving price enough room to wriggle around, right? And chances are you may actually get stopped out and break even more often than not, alright? It's fine to get stopped out and break even. However, when you notice that price eventually go towards your profit target, that's where you feel really sucky, alright? And the main thing is because your 1 to 1 is actually too tight. So what I do suggest, another alternative is, instead of a 1 to 1 before setting to break even, use a 1 to 2, alright? This way, you're giving price more room to breathe, alright? More room to breathe. So 1 to 1, 1 to 2, sorry, before setting it to break even. So this way, if price has actually reached a 1 to 2 risk reward and it retraces back and stick you at break even, you know, chances are the momentum is waning and it probably would actually stop you out if you are not taken out and break even. So you can use a 1 to 2, right? An alternative method besides a 1 to 2 would be a higher high and higher low, alright? So for this, if price does not make a higher low, you do not bail out your trade. So for example, this trade price, we can see that we have higher lows, higher lows, higher lows, higher lows, right? And here we have higher lows. So according to this approach of trade management, you also will be stopped out and break even for this trade because price made a lower low here. Alright, so the only way that you could actually ride out this move is actually using a 1 to 2 before setting it to break even, which is what I use quite frequently as well. A 1 to 2 before setting it to break even, because this way I give my trade more room to breathe. However, do understand that by using a 1 to 2, you will actually face a little bit more losses compared to someone who's using a 1 to 1, right? Because a 1 to 1 they will stop out and break even more often than not. But for using a 1 to 2, you tend to either hit an extra SL or hit your SL a little few more times, but chances are you have a higher chance of your trade actually going to TP as well. Alright? So this is actually something that you have to consider, right? You have to weigh the pros and cons and understand your psychology about how you will actually like to manage a trade, right? So I can tell you personally, I wasn't in this trade. I did not even manage to set my orders because I was at work and I missed this trade entirely. But for those traders who actually took this trade, right, and long around the 107 area, this will actually be an issue you guys have faced, and I hope you guys actually gain some enlightenment from it, right? So yep, with that I will conclude for this Swiss franc yen setup. Next setup I'd like to go through is actually the Euro Swiss, right? This is the daily chart, and looking at it, you can see that this price has actually been in the range. It has been in the range since the Swiss decided to peg the euro against the peg its currency against the euro at 1.2. So price action has been really pretty, I would say, sloppish, and but nonetheless it's in a trade and in a range, and we can actually have opportunity to trade this setup. So looking at it, price came down, test the lows here, rallied up higher, formed a doji before an engulfing pattern, and came down lower, right? It consolidated before whipsaw itself lower. Did not manage to touch the low and rally up higher again, right? And what pattern formed next? We have an engulfing pattern here, bearish engulfing pattern. Price came down, tested the previous lows, right? Formed some kind of triple bottom and rallied towards the high again. And price formed some series of doji and took its time to actually wriggle its way down before touching support here. Formed a series of doji, and right now price actually attempting to trade the resistance level again. So based on my take, I personally feel that unless there's any big major news, right, this pair is unlikely to actually break out of this range. So what I'll do is actually sell as price rally into this range, right? So where would I look to sell? Technically speaking, the value zone is actually around here, right? The upper echelon of this range, of this resistance level, right? So this is an area where I look to sell, right? And my stop loss would go above this swing high over here, right? You notice I wanted to put around here, but no, here actually. SL above here, right? So you're technically about to short at this green zone here, right? With stop loss here. So looking at it, let's see what potential move could this potentially be. You're looking at a potential be about 60 pips stop loss, and if you can get into this support level, it's almost close to 1 to 3 risk reward. If you do not even get to this support level and say you got around this support level, it's also a minimum of 1 to 2. Alright, so support level to look out for will be this level here and this level here. Alright, so that's for my Euro Swiss. And the last trade that I would like to go through is actually gold. Right, because gold seems bearish to me right now based on the charts on the weekly. So looking at this is gold. Alright, I've plotted my SNR levels. You guys may want to compare with mine, and notice that what happened last week for gold is it broke a key interim support level at the 1300 over here. Price closed below. So basically, in the coming week, I'll be looking to sell gold, right? Because it actually closed below this interim support level. So where will I look to sell? That's when I'll go to the daily and the forward chart to look for entry, right? For this pair, I'll look to the forward chart. Okay, I'll zoom out and see where are the levels I look to sell. And I've identified, again, potential value area will be actually the 1300, this level here, area to sell. And next will be where would I place my stop loss? It will be above this swing high over here. Alright, so a little bit of trade management. If price do rally towards the 1300, you can look to sell, place a stop loss above this swing high. If price do come down lower and test this interim support over here, set your trade to break even and look to ride the trend as long as you like, alright? Because there's no point giving you exits, because exits are actually pretty discretionary. Some traders like to use a fixed risk reward exit. Some like to ride the trend as long as they want. Some like to use a FIP tool to give them an extension Lulu where they can actually take their profits. So there's like 101 ways to go about exits, and it's not fair to me to just mention one approach to exits because it may not fit each trader's psychology. So with that, I'll actually leave the exits to you. Alright? So if you guys actually do enjoy my analysis, you can go down to my website at tradingwithrainer.com. There's free articles, and there's one I written recently which I think have provoked a few trading gurus out there. Right? It was actually this article, Trading Guru. So yep, I even posted on a few trading Facebook discussion group, right? And the admin didn't even allow this post to be up because the admin is probably one of those so-called trading gurus, right? Charging those expensive courses. So yep, you may actually want to check out my website and actually analyze and go through some of the materials I provide, because everything is for free. Alright, with that, I hope you guys enjoy your weekends. Alright, good luck and good trading. Thank you.